Well, IT, as I was talking about, is the top sectoral loser in trade. It's down over 4% in trade, the biggest monthly fall that we have seen since April 2022. What are the major headwinds pulling the pack down? Let's get in Rucha to understand more.
The major headwind is number one, high US consumer inflation expectation. Now, this would mean a delayed rate cut. Number two is the discretionary demand, which the revival of which may be pushed away because of high expectations of inflation. And thirdly on my list is Capgemini's CY25 guidance now, which implies more uncertainty, which came out a couple of weeks back. And the thing which came out 2 nights back, that is Nvidia's earnings, which was disappointed the street, and that is why the IT pack was down or volatile yesterday and is down in today's trade as well. The stocks which have fallen the most in 2025 include at the top is Coforge, down about 26%. Remember that Coforge was one of the stocks which outperformed in calendar year 24 along with likes of Persistent. Persistent has been down by about 19% since the start of 2025. So largely, if you can see on your screen, the mid-cap names like Emphasis, Persistent, all are the top losing stocks since the start of 2025, and the ones which have lost the least include Infosys, Wipro, LTTS, down by about 10%, 6% and 3% respectively. Now in terms of valuations, well, talking about the top tier companies, TCS trades at about 24 and a half times FY26 PE, which is below its 5-year average. So if you look at the top tier IT companies on your screen right now, you will see that most of the top tier names are trading at or below their 5-year average, except for the like of Wipro, because Wipro and HCL Technologies have run up a lot in last 1 year. That is why these are not trading actually below, they are trading above their 5-year average. But the likes of Persistent, LTS and Emphasis, the mid-tier IT names, these are trading well above the 5-year average. Persistent is trading at around 50 times versus 38 times its 5-year average. So a lot of valuation concerns around the IT companies are also hitting them up right now. Now, lastly, let's look at what growth commentary they gave in the third quarter. Well, TCS mentioned that they are seeing early signs of revival in discretionary spending, especially in the banking and the retail space. Infosys also mentioned something on similar lines, wherein they are starting to see some positivity on the discretionary spends. HCL Technologies as well mentioned that improvement in discretionary spends is what they are looking forward to, and the tenure of deals are also getting shorter. But this was as on January, after which the 4 to 5 triggers which I mentioned at the start of this conversation have actually hit the IT pack as a whole, and therefore the next earnings seasons, that is the fourth quarter earnings season, will be very crucial, especially the commentary and what kind of guidance are they looking forward to in FY26 is of utmost importance for IT companies.
Right. Well, thank you, Rucha, for that detailed understanding on why the Nifty IT pack is down. Narendra, how are you looking at the IT sector overall? Do you think that the fall is much more than what it should be? And any value buys that you're finding at this juncture when it comes to the Nifty IT index? Any stocks that look attractive?
Yeah, I think in during Q3 results, what we've seen is that IT was just starting to show signs of turning around, and things were looking good for the near to medium term. But since the recent data came in and the kind of outlook the Trump administration has would definitely have impact on their internal economy. If you see the latest jobless claims data and then the things happening in the technological front, where the outlook is also it looks like it's slowing down. So things have again started to behave in a manner wherein it again looks like it is not going anywhere, and it would again drag around. So things are looking big before they actually improve. So right now we have a cautiously positive kind of a look on the overall IT space, and we have a preference towards larger names in the overall space like TCS, Infosys, and HCL Tech.